right. Hello, everyone, and welcome back to another week of course, big stock markets and crypto and everything else. I hope everyone's had a great weekend. Have you all had a good time? Let's give a shout out to some of the members joining us early here. As per usual, we want to always make sure we recognize the early ones. We've got Gary, Roman, Shaw, Sean, Chris, Palace, Giles, Kane, James, After Dark, Verified, Mitchell, and many others. Thank you very much for joining us here. We've got Zulfi as well in the first list. So we come into a market, which is at, I know, a critical point. But more importantly, we need to discuss, obviously, all of the swing trading, investing, and day trading concepts. So today we'll be covering off on not only our thoughts here for the stock market, but we'll be talking about crypto, commodities, and everything else. I guess let's begin. Actually, where would you guys like to begin? I'm thinking we're going to begin with a bit of a medium-term thought process. Where do we see swing trades activating? How do we see them activating if they do happen? Are we actually starting a bear run to mean reversion? I think that's probably a good place. What do you guys think? You think it's good? I'm pretty sure you will. So once that catches up, we'll check it out. But let's start off here with US 500 analysis. So first up, we want to go over to a weekly. And when you're looking on a weekly chart, always we want to be understanding where are we at? What kind of zone are we at? Have we seen a really ridiculous move? Are we overly extended? Have we seen a pullback, et cetera, et cetera? What type of market are we in? So at the moment, we are in, of course, a market that has moved up. And if you put a Bollinger on this, you would have seen that in a previous video, we talked about the idea that the weekly went outside the Bollinger. So if we load up, maybe, I think we've got a chart over here with a Bollinger. Oh, it doesn't matter anyway. But basically the Bollinger, we can add one Bollinger bands. Let's add that onto the chart here. There we go. And you can see we've got the weekly close outside of it. Now, I mentioned last week, this is quite rare. So from a swing trader's perspective, this is a point where you need to be paying attention. Absolutely. It's very, very important. Now, we've got a question coming in here. Gary says, Tom, can you define your term lengths? When you say medium term, does that mean 3 months, 6 months? I generally say medium term will go with a 1 to 6 month approach, medium. Now, a long-term approach would obviously be 6 to multiple year, and that's more the investment approach. And then, of course, short date is anything from 1 day all the way up to 1 to 2 months, generally 1 month. So I'd say 1 day to 1 month. That's a good way of looking at it. So we mentioned anyway that from a swing trader's perspective, someone that's looking at maybe that 1 to 3 months perspective, that the Bollinger outside of the weekly is underappreciated. It's probably one of the greatest indicators in terms of extension. I would always have it on a weekly, and I'll give you as a top tip for today. That's something that I would never ignore on markets, and I would consider it a very pivotal point. And if you go through your history, and if anyone did do that, and you have a look at the times it breaks outside, and we're on here a futures market, I would usually do it on the real market itself, being SPX code. You'll notice it very rarely actually closes outside of these zones. But when it does, that usually means an extended period, and the markets will often turn at those zones. And you can see how accurate it's been. Is it the same week? Not always. Sometimes it takes 1 to 2 weeks to really turn around. Down here, we break outside, we go a bit higher, we break down, we see the low for the market, we turn. Over here, we come down, super extended market, breaks outside, rallies back up to mean reversion. Over here, we break outside once, one more week down, then we get a rally. So it's more of a hint or a warning sign to stack with your other reasons. And I think that's a big thing here. Troutster says, I love you, dude. Am I getting shout out? Mate. Troutster, you can get a shout out. There you go, man. You happy? That's very good. So yes, the Bollinger is a big deal, and we saw it break outside. Gringador says big focus on money market funds right now, but no discussion on when to get out. Any thoughts on when to exit money markets plus gating plus liquidity issues? That's a good question. We'll come to that very, very soon. So I tell you what, we'll just leave that there on the screen, and then we'll come back over in a minute. So first up, Bollinger went outside. Now that's a good kind of area to actually answer in some ways this question about whether big funds get out. Often when you go outside of a Bollinger, it's time to say, are we at a swing trade level? Have we seen the extension of the market? Are we at a point where we should get mean reversion? Now, for anyone that doesn't know, the middle of a Bollinger is actually just a 20 moving average. So really all the Bollinger Band is standard deviations away from the 20. The 20 moving average is probably the best moving average in the market. I wouldn't mind asking the chat though, what's your favorite moving average? I'm going to put my hand up. 20 moving average for me. 20 is the best. Now, why do I like it? I'll answer that question once you guys select which moving average you like the most. But I'll give you my reason for why I like the 20 or the 21. So we break underneath. Now, did we get a swing turn? Did we get the actual signs that say, oh, this market's weak? Well, I tell you what, the futures almost got there. Take a look at this hit before. 43.36, guys. That's what we hit. And you're pretty surprised when you see a level like this because I was like watching it. I had a little alert and one of my little alerts went off and I came in and I went, oh, that didn't really hit. Come on. That was that alert. It tapped it. It basically hit right on the level and then it rejected up. So have we seen a swing turn underneath this last level of demand? The answer is no, not yet. We've got some moving averages coming in here. So let's see what everybody thinks. Trader Joe says the 800 moving average. Peter G says 20. Tommy says 1 MA on the 1 minute. I think you're having a laugh there. And then Mark says the 20-day or the 20-week. Well, 20 in general moving average. 20-week would be my favorite, though, if I had to pick one. Spinks says 21. Fair enough. Paul says 50. Few people saying 50, 200, 200, 21, etc. Now, why would I like the 21? Can anyone guess why I might like the 20 or the 21 in general? I'll give you a hint, calendar month. Let's see if anybody out there knows. Billy Mays, 1 MA on the 1 tick. Yeah. 50 EMA closed. Oh, 50 EMA cloud, sorry. Simple or exponential? Simple is generally the best rule, but for a 20, you can also go with an exponential if you wish to, because it is a bit faster. Obviously, exponential hits more on the most recent price, so it's a little bit better if you've got a market that's moving quite quickly. Few people saying here, there we go. There's the question. Yep, absolutely. Trading days in a month. You are correct, Edward. It makes perfect sense when you think about it that way. Of course, we have on average, let's call it 30 days. But really, are all of those days, trading days? No, on average, we kind of pull down about, 8 of those out of weekends. Then we get 1 or 2, sometimes public holidays and certain things. So we kind of get like 20 to 22, pretty standard in a month trading days. So therefore, it makes sense that because we're humans, we work on calendars and we work on quarters and we work on yearlies and all these types of things. So really, you like moving averages that often correlate to those types of trading periods often work the best. And it's just because we like to segment everything. It's like, why do we have a year? Yeah, we decided a year is very important based on our lives as well. We all have New Year's resolutions. And does anyone actually live up to their New Year's resolutions? I don't. I don't think I ever do. I always go, yeah, I'll do this. And what I've come to the conclusion of is instead of setting wild, unrealistic goals, I set 2 goals, never more, 1 to 2 goals. And it's more of a way to live by, a small change in lifestyle each year. Since I've started doing that, I always meet the goals. But when I used to have all these ridiculous goals, it didn't really work out. Let's see what you guys think. So anyway, here's the swing. That's the low point. Here we have the high. Here we have the low. Here we have the higher high. And then, of course, we're looking for that lower low. And that should give us a signal towards the short. Now, let's have a look at the Nasdaq so we can compare apples and oranges. You can see here the Nasdaq, again, not through that demand zone. I've got that marked up around 14,800. We have been weakening, but we do need to remember that still the bull is fairly intense. And we'll talk about where I think the bulls take control this week if they're able to, and where the bears obviously are is more likely underneath 14.8. I'd like to then see a sell through, then a rally back up into this range, which we'll talk about on the daily show, etc. at that point, and then we'll go through. Also, if I can remind everyone, if you enjoy this session and you like what we're going to be doing here today, make sure to smash that like button. It does help us out, helps the channel out, etc., etc. Live streams, for whatever reason, they're being hidden on the YouTubes at the moment, so it'd be good to get it out there a little bit. Deborah Smith says, I don't even make them anymore. And Spink says, never make them, and then I never fail. Interesting. That'll be a good one. Rana says here, what happened to the Tesla gap at 145? Tesla runs in 21-day cycles. Buy, buy calls 45 days out. Okay, 21-day cycles. Interesting. Haven't really thought about it and whether that's true or not, but that would be a big one. What happened to the 145 call? Well, we went past 180 and 190, and that was it. Zero DTEs. Well, not zero DTEs, but in this case, it was a squeeze of options. And as we said at that point, it's not going to happen. Could 145 be hit in the future? Absolutely, though. Absolutely. It's still very possible. But as I mentioned, we're not going to try shorting just because I think 145 is a possibility. Once we hit that point, there's nothing much we can do. So Nasdaq goes underneath this zone. If that happens, I think we're probably looking at a swing. The next swing point would be in these lows down here. So we'd be getting 14.5 to 14,250, something in that range. So I'll just mark up a few with you now, like in here as a possibility of the next drop zone. And then after that, if we go back to a daily here for the Nasdaq, because I know so many people like it, you might notice something, and that is the 20 moving average has not really been denied since that breakout. So, of course, the easy structural zone to be looking for in the future, should we come down heavily, would be here. And if we go to a weekly Bollinger, you'll notice the 20 moving average is just above that. So, again, would this make sense to come back down to these ranges? Yes, it would, if we're going to get a big return. Now, there's a few reports I've been reading over the weekend from some of the big banks. A couple of interesting things. Number one, we've seen large stats coming out in terms of the data from retail traders. I believe there was 1 billion plus literally traded last week in the call end. So that means that it's very strong from retail traders to buy the dip right now. Incredibly strong buy the dip reflexes. We've estimated that based on the calls. As you can see down here, we've got 55% calls. Every day is 55, 45. Big difference there. And some of the other things I shared over on Twitter, bull bear spread, of course, JP Morgan sentiment indicator here, equity risk premium, the amount of calls just generally outstanding out there. This is the Zero Hedges comment here, which shows retail fund flow sees 14th straight day of inflows. And this is just through one of the areas. And you might have seen over on our Twitter, follow at FX Evolution, I also posted a couple of big things here. We've got Goldman's Prime book showing that US equities have witnessed aggressive selling. So this actually means that some of the biggest people in the know have been net sellers. I also posted this comment last week that shows here JP Morgan reports that retail traders have enthusiastically invested a staggering 4.4 billion, now more since this point, in equities within the past week. This is 2 standard deviations beyond the 12-month average. Meanwhile, Goldman Sachs has stated 9 of the last 10 hedge funds have been net equity sellers. I can also report that I'm pretty sure a huge player got margined last week, the week before last week, because when I was looking at some of the reports, it was showing that they had to trim, and that usually means someone got margined pretty hard. So some interesting stuff there in the markets at the moment. This is the other one that we're seeing, which we're bringing back in just because it's got a massive shift. Remember, smart money versus dumb money, don't think about the wording so much. Think about what it means. What we're seeing here is a discrepancy. If we have a discrepancy, does that give us edge? Historically, when we've seen discrepancies this big, markets have tended over the next 1 to 2 months to give us negative returns. Okay, that's the stats. When we see discrepancies this big, other periods of time we've seen them this big, like there's of course a reverse where smart money's buying, dumb money's kind of lower. And these types of discrepancies, when they're this far apart, basically underneath and above, which is what we've got right here, there is a negative return correlation. So we talked about medium-term thoughts. We're coming to the third quarter. We're coming into earnings. Obviously, the Fed is claiming they're going to do more rate hikes. The market doesn't believe them. We can see that by the Fed Watcher tool. So yes, I still remain on the macro side. You would say negative. Whether we look at skew, whether we look at VVIX, which is increasing here, volatility of the volatility, it's all there. And it's showing us that, we could remain, kind of negative on the macro side. Does that mean that we have super strong short signals? Not really. We've had a short signal. It's come down to where the demand needs to show. So if we're going to go lower, though, underneath this point, I'm hoping at that point, and it is a hope, that basically markets continue down to mean reversion. And in this case, it is the weekly 20 moving average. East Star says, according to, what do you mean there? East Star. So, yeah, there's some stuff there. It's going to be pretty interesting. And of course, if markets do get under this zone, it's very possible that we start to move down through the chunks and hopefully get back to some mean reversion. So let's have a look here on you guys might want to buy. In fact, let's do a poll. We love doing polls. So let's poll the community here and let's see what you guys have to say about whether you're going to buy mean reversion. Let's have a look whether you're going to do it. So start a poll. Would or are you all right, I'm just going to write like this. All right, let's see what you guys have to say. Will you buy it? Some of you might believe it's going lower, so that's not possible. Verified News says summer rally. Generally, July gets the rally, if that is true. Now, let's share the stat that we had from that one. We did put it in our weekend video as well. It's a good share. Where is it? Somewhere in here. There it is. So this one here is, I think, a pretty interesting stat. Basically, it says that when we had a post-June OPEX negative, which we did, and that was, by the way, pretty statistical good chance. So stats playing out there pretty nicely at the right point. We then tend to have a 3-week positivity. Now, that doesn't mean that this week can't be negative. In some aspects, in fact, 1, 2, 3, 4, we had negativity either this week or 6 negativity the week after. But the sum of the next 3 weeks, traditionally, was, generally speaking, a positive sign. 16 up, 1 down in these pitch situations. So if we're looking at it, we have to say, okay, well, what does that mean in terms of our technical analysis? Well, it basically means for that to hold relatively true, either we get a false breakdown, which I don't know if it's going to be a false break underneath here, or we find some type of rally today. So let's play the rally card and say, okay, well, if the markets rally today, what are we looking for in terms of a proper swing? The market's going back up, everything's hunky-dory, bulls are back in town, and we're all dancing around. Well, the first thing I'd be looking for is probably a shorter time frame switch of trend. So what's that going to look like? Well, I'm struggling to find exactly where the turn's going to be, because the obvious one is going to be breaching this zone. Might be a bit far away, though, for a lot of day traders. So in here is also very important. So let's mark up some of these points together. We'll mark this zone in here, and then we'll mark our highs up in here, and then we'll just check them out through a few time frames. So I always like to have a look at different time frames, check out what's been happening through these areas, see how the markets have interacted with the zones before, whether it was strong supply, whether it was strong demand. But I think these two levels mark basically changes. We now have the lower low. This would breach and show us a change of trend on those time frames and should implement the buyers. So I think bulls are probably looking for at least a 43.70 plus in today's action, probably 72 plus. And if that does happen, then you can feel okay about the market. At least you can say, well, I think we can rally to the next point, potentially the next point, pull a fib from the down, look for a 61.8 style turn, something like that could be possible as well. So bulls looking for a 43.72 plus. Bears, you just want to keep getting this thing short. New lows under 43.36, 37. Once that occurs, we basically are starting to say, okay, give us a little bit more room. Then pullbacks, you would think, want to be faded at that point. Of course, data doesn't necessarily point towards fades happening. It points towards bullishness. But yeah, we'll see with the price action. Price action will ultimately be the key. There's so much macro that tells you to be potentially short here, but there is also that strong data that says, well, traditionally we haven't sold off on this point. Mark Futrell says, based on my indicators, I would favor strength, sell rallies versus buying the reversion or dips. So you would say favor strength, sell rallies versus, so you want to sell the rallies and not buy the dips. That's pretty scary, man. You reckon, Mark? You're going to be able to do that? I mean, some you can, but sometimes it's quite hard. Sammy says, Les, like what you do here. What's the difference and what's the benefit of joining the monthly subscription? Well, if you join the monthly subscription, I guess you get me talking about the market every morning in the pre-market. Shameless plug there. You get my macro weekly report, which is pretty damn good, I think. And that talks about swing and investments in more depth and detail than here. Kind of goes through, Goldman Sachs, JP Morgan thought processes as well, which is, of course, how they staggering, how they structuring in markets. And, a bunch of other stuff. You can always check it out. Free 7-day trial on our website, fxevolution.com. But anyway, the point here that I'm trying to get at is that we do have, two potential rally points. We still know that we're strong. We want weakness, probably, because I think mean reversion would be a good thing for this market, but we don't know it's there yet. Bit frustrating. I would have thought Friday would have shown it to us. We didn't quite get it. So let's go through a few other markets. The swing at the moment is we need new lows. Then we look for weekly 20 moving average. And ideally, a weekly 20 moving average, we see how the markets react to that point if we can get down there. What about the Russell 2000, though, you might ask? Well, the Russell 2000 got smashed last week. So if we have a look here, these are the small caps. And what you'll see is that they got sold off pretty aggressively. Now, they're not quite down to my first level of demand, which sits around 1800. So the Russell sits in limbo land. And I think at this stage, rallies could be faded. So there's some interesting short concepts through something like an 1860 here on the Russell this week. And I think it's worthwhile having it on your charts, checking out your own personal opinions, of course, and having a look at whether you like this zone to fade. Does anyone like the idea of fading the Russell if it does rally? What do you guys think? Thanks very much, Peter. I appreciate that. Thank you. Nemesis08 says, I'm just here for the witty banter. Good to have you here, Nemesis. Whimsical Solid says, market is politics. It's long on longer term, short on shorter term. Well, generally remaining optimistic is pretty good, but I will say this, depending on the way that we crash over time, it will depend on whether you really want to hold your investments or not, or maybe be deleveraged. I will say, and I've always said here, that never forget the global financial crisis. I'll just say that. And what I mean by that is it's not so much that it was all dodgy and there was bad, stuff everywhere. It was that residential property fell. Okay. When that happens, I'll say it right here, right now. Be terrified. Be terrified next time that happens. And it will happen again in our future. When that is leading it, yeah, go hide under the desk for 12 to 18 months. I'll be sitting there, the biggest bear on the boots, and I'll be bearing all over the place at that point, okay? But yes, in general times, if it is not led by that, traditionally, I would not sell my investments. I would just scale into more at the right PE ratios. And that would mean buying forward PE, doing a standard kind of Buffett kind of concept, buy quality, don't buy crap, all those types of things. Speaking of crap, let's have a look at a couple of stocks. Now, this is the point in the show where I always ask you guys, of course, we've done the medium term now. We're looking for mean reversion. We've got our levels. Now we want to talk about some individual stocks as well before we get into commodities and crypto. So give me some good trades, guys. Give me some good technicals. I don't want to see crappers. I'll give you a couple of bull and bear style scenarios, but I want to see what everybody in the chat has to say. Last week, you gave us a couple of interesting ones, I'll admit. I liked what the chat gave us last week. What do you guys think? Was it good? And by the time I was going to bring out the crap, what I was actually trying to do was bring on PayPal. But anyway, we'll bring out here. We'll go through a couple of questionable stocks that might have okay times, and then we'll talk about this sector right now. The first one has to be semis. And semis are often worth watching because semiconductors did so well coming off the whole AI, everything's fancy and great again. And they rallied and they gapped everything, and every semiconductor under the sun went really strong. Now, if we know that we have this big supply over here, or an all-time high basically for semis, and we came back to that fairly quickly. Now, this is symptomatic of usually new bull runs because semiconductors are the runner of the market. So they have been the best. I mean, it doesn't take a rocket scientist to load this out and say, well, this was probably one of the best sectors of the last 15 years. You could probably argue that there's going to be a semiconductor in every single product in your house over the next 20 years as well. and your car and your brain and who knows what else, but it's going to be there. So where do we get a swing trend change for semis? I've marked it out here 143. Now that's going to be significant because that's probably also going to mark out mean reversion, filling gaps, potential movements back to this area down here, which is around that 131. So I think semis should be on at least the list just to watch. And if that happens, that's going to be a big deal. Now, second junket, let's have a look here at the bull side of things. If we still want to be excited about markets, we're going to look here at PayPal. Now, PayPal was one of our favorites 2 weeks ago. It's one of our favorites last week, and it's still one of our favorites. How'd we fare? Let's have a look. How bad was it? Well, the answer was not too bad considering the market was down for the weekly session. It was a long leg doji. We had a low, we had a high, and we basically opened and closed, I guess, at the same points. So the thing with PayPal is it's going to require, of course, lots of options. And at the moment, it's made the first switch, which we liked. Obviously, we liked it here. And we still think that at this point, it's still finding some strength. Now, PayPal is one of those ones that you're looking for a gap fill. You're looking for the trend line. You're looking for coming into this structure, all of those types of things. Is it a good stock? No. Does it have volume? Yes. Is it trading okay at the moment? Sure. Would I have risk management on this trade? Yes. It's pretty crap, so I would have risk management on it. But yeah, I mean, what do you guys think about PayPal? Do you like PayPal? Or is it just too crap? It's pretty crap, yeah? Now, I didn't think this day would come again, but can anyone guess a stock that I probably, if you've been following the channel for a while, you would know it was in my top 5 hate stocks. And no, it's not space, which also was in my top 5 hate stocks. Now, these were stocks that when everyone thought they were good, I thought they were trash. And the reason was simple. They had no moat. Okay. The moat was weak. And what moat is make sure you look that up if you're an investor, because Warren Buffett's main concept of winning at life was buying giant moats. He had a lot of alligators. He probably had Steve Irwin, marshalling all the alligators and the crocodiles and stuff, if anyone knows who he is. And he had some good companies with big moats. So let's see what you're thinking. No one's got it so far. I'm surprised. I actually mentioned it the other day. Oh, OG's got it. ZM. That's right, ZM. Unusual options activity. ZM. What a giant piece of trash. But do we like Zoom? Well, I don't know. I've been watching it here for a little bit, and it's gotten some unusual options activity on it recently, and it is incredibly depressed stock. How bad can it go? Well, of course, it could still swing the lows, and we could go to pre-IPO prices. But I do find it interesting that we are basically sitting at almost IPO prices. We have seen some recovery. Now, have we seen a change of trends? Not really. We'd probably need to breach out past 75 to see that. But this stock presents some interesting points. It has a little bit of volume. It has random options trades going on it, which are both short dated and longer dated. And I'm wondering whether there's a chance that someone might pick that one up. Now, of course, the risks are that you've got to have stop losses. You've got to have protection on it. But what do you guys think about Zoom? Is that just too trash to handle? X says PayPal is trash. Thank you, X. Quillau says Tom's son's investment kitty. Quillau, thank you very much for the Australian $10. Yes, he already owns some of the best market in the world, the American market. Yep, he's got some of that Nasdaq. He's got AI before. I mean, who else has AI? And he's only 6 weeks. He's not even, 6 weeks old, and he's already got AI. That's pretty good. So thank you very much, Quillau. Appreciate that one. Billy Mays says, everyone says Zoom is trash and done for. Maybe that's why it's going to go. Now, of course, does this mean I want to buy it as an investment? No. Neither do I want to buy PayPal as an investment. I'm not interested in them from that perspective. These are basically, are we going to activate some kind of day or swing trade momentum? So I would probably, look, I'm going to personally be watching it. I'm looking for trade volume. I'm not obviously endorsing this particular stock in any way. I'm just looking for the technical reasons of breakout, etc. So I'm going to mark some of the points that I'm looking at, 72, 75, and I'm obviously looking for whether we activate because there's some strange options going on this stock. Now, let's have a look at this. And Terminal Sandwich says Zoom still has the name and people still use it. That's right. And Scott says your pic doesn't match the face. What do you mean, Scott? Match the voice? Oh. Very good. All right, let's go up here to a couple of stocks again. Quill Owl, put in your stocks if you're guessing anything or you found anything that you think looks pretty good this week. PayPal is like Neo, pretty much. Absolutely. PayPal is very bad. But yes, those look, it was up over that point here. Let's have a look what you guys are thinking. All right, here's some stocks. Oh man, there's so many stocks coming in. Which stock can I pick? Procter and Gamble. Ah, you want to go Procter and Gamble? Marathon. Someone wants me to look at Coin. Let's look at Coin first. Just off 23 minutes away from the market. Again, we are teetering on major demand here this morning for the stock market, seeing whether it'll move towards the downside. Now, I don't know if I like Coin. Now, it's going to require crypto to do very, very well. And if Bitcoin, which by the way, still hasn't closed, actually, did it close? Did it close above my zone? I don't think it did. Let's have a look at the weekly. Oh, geez. Marginal, eh? Wait, not even above 30,500. 30,000. Why did it stop at that level? 30,465. What a pain in the ass. It is still a pretty strong candle, though, from crypto. New high, still in the demand, and still in the supply zone. We'll talk about that soon. All right, let's have a look at a couple of others here. Let's look at PG. So we'll go to Procter and Gamble. Somebody said that looks pretty good. Let's go to the weekly here. Is it good looking? It's got some potential, I guess. It kind of looks like a double top, frankly. Obviously a high, low, higher, high, and it's on demand. So I guess if you're a buyer of this, you kind of want to be a buyer of it right now, purely because it's on this little demand zone and you're looking for it to kind of break up. Did it get a change of trends? I like this trade quite a lot. This is a pretty good trade. We see a switch. We get a new bull. That's good. Let's have a look at the weekly again, just so we can analyze this. Weekly looks okay at this stage. I don't know if it's very exciting. It's not super exciting for me. RGR. Let's have a look at RGR. RGR. That's certainly on its low. What's this company worth exactly? Now, this better not be a trash company. Ooh. Sub 1 billion. It's not enough, man. This doesn't meet. When we talk stocks, we want to go 5 billion minimum. 5 billion minimum is always the technical analysis rules. The problem with this stock is you go out and I look at this and I think, yes, I understand you're on the support or you're on the demand level. The problem is you're just not really, looking at something that's exciting. It doesn't have that nice kind of strong trade there. Let's have a look at Dish. Thank you very much for sharing that. SS says CVS. We'll check that out. Dish is horrible. What is this? Holy moly. Oh, no. Toxic. Lots of trade, but my God, it looks toxic. Wonder what that is. This huge volume, Jay, I'd go check that out. See whether it's a big fund that's done a massive fund transaction. Jesus, that stock is bad. Oh, Dish. No good. All right, we won't look at that because it doesn't even have any turn on it yet. However, I would look at that crazy volume spike and look why. CVS, another one that you guys are looking at deep in the lows down here. Drugstore company. Usually struggle a little bit, these ones. They often go bad. Potential for a double bottom. Obviously, you have the lows here. A little bit of volume coming into it. I think when you go back out, you're probably looking at a fairly deep pullback that it's right around those demands. I like the level actually. It does look like a nice level. I'm not sure if that the stock itself is that good though. But it is around that. Oh, that dish was bad. TGT needs some love. Yes, I want to look at Target, even though people don't like this stock. I think Target does deserve some love. And actually, it hit my level. I think it's a pretty good level. This was one of our favorites from last week. Regardless of what you think about it, it's been probably oversold. It's got a nice turn. It's got what I call a first time frame change of trend. It's come back nicely here. What do you guys think of Target? Regardless of your opinion of it, if you're trying to make money in the market, sometimes, I mean, you can take the moral high ground if you wish to, if you're annoyed by them for whatever reason. But overall, this is still a tradable asset. And I think that looks like a decent turn. Let's have a look at the weekly here. Again, we get that in golf. We get the turn. Interesting point there for Target. So Target certainly on the watch list. I think that's decent. Migo, $5 says BNTX. Let's take a look at that. BNTX. Bion Tech SE. Is it worth over $1 billion? Yes, it is. 25.82. Very nice. Let's go over to the weekly. Very sold off stock. I assume there's something sick about it. Volume has decreased heavily over time. Some things that are notable is when we're looking at these previous levels, you can kind of see that we still haven't gone to those lows. So there's a possibility, I think, for lower points still on this stock. And what I'd actually be looking for is this to continue to set up like a Wyckoff style bottom. It's going to be hard to stop what is a falling ship. So if you look at it, it's found a lot of defended base before. It struggled to get through here last time. Obviously, we must have done some analysis here. Totally failed that analysis. You can see the stop loss was smashed a few days later. So let's go through it. Is it acting technically? Maybe not. Is this a turn? I don't think so. Not yet. That weekly worries me. And I figured that might be there. Big rejection weekly. Looks like it wants new lows. I'd say that thing's going into 90. Yeah, not so good. All right, let's go over here. CCL. Billions of stocks to choose from. I don't know. I like to trade only 5 billion and plus. So there's not millions for me. There's only there's a decent amount in America, let's face it. In Australia, it's probably about 50 stocks. But overseas, there's quite a lot. This is pretty nice. CCL Carnival. Obviously, it broke through. Got that massive run from it. When you look at this on the weekly, it looks a lot better. I mean, that looks like an inverse head and shoulders. It looks pretty strong. Now, if we go to the daily, again, it looks pretty good. It's on a massive overextension, so I wouldn't be surprised at all to see it sell back. But that's actually a beautiful base. I'd snapshot that. Great base, guys. Yeah, really nice base. Totally has all the Wyckoff style reasons behind it. Get the selling climax. You get that kind of hit to take the stop losses out. Get a rally. You get the change of trend, and then you get that final push. Beautiful entry in here. Really nice. I like that trade quite a lot. And it kind of looks like it's about to complete. So it's probably going to go a little bit higher, structure into this, and then possibly have issues. So I'd feel like this stock is right on where it should be already. But very nice here. CCL hurt me when it was 30-ish. Oh, yeah. Well, it would have. Well, it wasn't this. Didn't this come off as a SPAC or something? Wait, no, it's not a SPAC. It just got smashed during the COVID. That's right. I forget what this is. So, yeah, it makes sense that it might have hurt you up here in the 30s. You probably broke out, thought you would buy this. Stop loss below the low, got slaughtered. Unfortunately, that is going to happen. But that's nice base. That's the type of thing where you could show that as any chart. I wouldn't care what it was. It has the right type of turn. And the volume is really hot down the bottom. That's good volume, guys. That's nice peak crescendo. It shows Wyckoff's third law of effort. I love the law of effort. That's fantastic. Now, if we can get one of those with a nice breakout on it that's actually happening right now, that'd be pretty fantastic. All right, let's stop talking about the target thing, please. That's all good. Let's have a look at Roblox. Very good. RBLX. We don't have any time for that stuff here. We're just talking about pure financials. That's all we talk about. Financials, and we look for opportunities. Roblox has been trading a little bit too much in its range. Is it a nice build? Problem is, it's been stuck for so long. It's kind of lost that momentum trade. I do tend to stay away from things that have been trapped for too long until they show me that they're ready to do momentum. Now, generally, that will be some type of steal concept where it takes a new low and that therefore kind of, gets that slingshot style trade. A classic case of something like that would be like a natural gas, which is really coming alive at the moment. If we take a look at natural gas, probably underappreciated recently, we saw that huge sell off. Everyone cared about natural gas, that big rally. Everyone jumped in here. It slaughters everyone down here. Perfect. Then we followed it up into this. And I basically said at this point, I think this thing's long. I thought either here would be a good buy or around here would be a good buy. And at this point, it's going long again. And I still think this is a pretty nice base here for natural gas. And it's a very similar style trade with a very similar style process behind it. Yeah. Tom, will oil get crushed this week? Look, copper's probably the one to watch for oil as well. We're looking for, what's going to happen with everything else. Oh, Kenny has a good stock here, and that's Snow. Yeah, I missed that one, Kenny. Let's have a look at it now. Snow was, really nice turn. Again, getting that strong base. This is a Buffett special, this stock. He likes this one, or at least somebody in his company does. It's not quite on the breakout yet, but I agree. Snow deserves to be on our check page. It could be that it already has shown some size of turn. We get that sell climax that happens back in June. Then we get a bottoming base in November, which is different to a lot of the stock market because obviously it was October then. No new low while the market was raging towards further lows. So it shows that there is a base accumulation. You can see again, the law of effort, the volume has been higher for longer. I do think this stock presents, and I don't even know it fundamentally. Maybe someone in the chat knows, but you are correct. It's something that I've looked at for a little bit. I thought it actually had run better because it came up on my scanner the other day, but maybe it hasn't run as much as I thought it had. So 149, what's this up from the base? 21%. It's an interesting stock at these zones, though, isn't it? I mean, obviously, this thing went ballistic and was once $400. I hated it there because it was an IPO, and I hate IPOs for the first 2 years, pretty much 12 months, 18 months, that kind of period, at least minimum. But yeah, it's not bad. It's not bad. We have a series of high lows. We've got a breach of this high. We've come down with kind of a short that came through the earnings report and then squeezed that back. So that shows you that really the earnings, whether it was good or bad, and the market really wanted to actually still buy it. Yeah, good, interesting chart, and it's up 2.19% today. HLN, I like it. Let's have a look at that one. Then we'll go through a few other stocks. We've got 11 minutes to come in, so we'll go through some of the most popular. Helion, let's go with that. Now, Snowflake is a cloud-native platform that eliminates the need for separate data warehouse data leaks. The data marts allowing secure data sharing across organizations. All right, Kevin, I'm not sure if that was written fully, but thank you very much. Helion does have a daily little breakout here, but again, not sure how strong it is. This was a good pickup if you got that one. I like that. If you're still in it, I don't think you have to be worried just yet, but we're looking for structure in here. Probably around 880 would be one of those levels. Can we have a look at Bitcoin? We can soon. Absolutely. Let's have a look at SEA as well. Then we'll do a bit of thought process on, are we using SEA or do you mean SE? I assume you mean SE. This one's struggling a lot more. It's like the Amazon of Singapore and Malaysia and Philippines and stuff. Really struggling here, this stock. They burn a ton of cash. It is a bit of a problem. It was once on my favored radar back in the day. Then they did a crazy capital raise, which, if I remember rightly, the crazy capital raise was somewhere in here. And those poor people got destroyed. And then it just got walloped. If you believe we are doing a turnaround in the future, this base is interesting because look at that volume. Again, remained relatively high for a while, but it's still up on where it used to be just by a marginal amount. So yeah, this stock is interesting. I'm not sure if it's time just yet for it. AL says, how does AMZN look for you? Yes, we'll do that one here quickly. AMZN did look pretty strong, I believe, and I still think it looks pretty good. This is a member of the private community like this a few weeks ago. I still like it. I think it's fairly strong where it came off. Nice weekly rejection here. Big, strong weekly close previously, and it still looks relatively good. I like the base here on AMZN. Decent volume through the lows. Again, could be consolidating. You want a new high. Once that happens, we should be able to move up further. Decent base here on this one here. I don't mind it at all. All right, let's go through some other stocks. We'll do Tesla. Has it turned? No, not yet. Will it turn? I think probably. It was pushed very heavily by options. This level here is important, 247. We reached it previously. We rallied back off. And then we started selling again. We're looking for underneath 247 this week. That should instigate some swing traders. At the same time, we would see the S&P 500. We'd see the Nasdaq. They would all instigate swing. So again, if you're kind of long Tesla, you want this thing to hold 247, 248. If you are short Tesla, you want it to bust that low, and then rallies would be met by, you would think, sell demand. Now, has Tesla gone to the final target? No, it hit the gap fill. It hasn't quite reached 300. So I think if the bulls do command this price this week and SP500 starts running off again towards the bull side, do not be surprised at all that Tesla could still reach 300 quite easily. It is possible. Both are very possible. We just, at the moment, the trend's up. We don't have a turn just yet. Are we going to see more bank failures? Yeah, probably. What about Nike? Let's have a look at Nike here quickly as we go through a few more of these stocks. What do we think of Nike? Again, only a few days off earnings, which is always a bit of a pain because it's more of a gamble. From a trend change perspective, you would say it has done what we call a first time frame. The risks are all on earnings now, and I wouldn't be surprised at all for it to hover, and then we find out how bad or good the earnings are. I don't know. I walked past like a store selling shoes, and they were still damn expensive. Kicks, whatever we call them. And you know what else was in that shoe shop? Prime. I didn't even know what Prime was. And then I found out that Prime is a YouTubers or YouTubey people. Solid was a drink. And yeah, my goodness. These guys were scalping it for like, I think it was $20 a can. I was like, what the hell? $20 for a can of Prime. What do you think, guys? Is it good? It probably tastes really bad. What do you think about Enphase? Enphase is also on our watch list. We've been watching that for a little bit now. It keeps hovering around these lows. Enphase really needs to find buyers. Bad, really bad. It cannot. You don't want this thing under new lows, because if we go out, that's kind of pointing towards a new low here. Would point towards 120 again. Yeah, would point towards those. All right, let's do some rapid fire stocks. We've followed a few stocks recently. Intel was one of them. Is Intel back at buy price? Theoretically, if you believe the bull rally is here, this should be at the buy price again. So Intel, we ran it here. We kind of think 38.40 still is on a target. It got brutally sold last week. It's come back down. TD13 read as well on the oversold. So I'd like to see Intel find buyers. Volume is still high here. So that's one for the rapid. We like the level from a technical standpoint. Of course, you do your own due diligence. Let's go over here to the Disneys. The Disneys sucked. Okay. Now, Did they go too low? Probably. I mean, we traded this basically based on an island reversal. It ran to what you would usually use as a first take profit. We liked the idea that it could go further. Of course, that would lock in, a 1.5, 2 to 1. Sometimes you want to get a little bit greedy and you descale your position. Yeah, you don't want new lows here for Disney. So new lows, I think, push into some serious levels. But if you're like someone that wouldn't mind buying Disney at cheap prices as an investor, I would say marking out 84 and 79 could be interesting points. It does tend to have a very bad pre-election year out of interest. So it's living up to that name. The other one that's interesting at the moment has to be the Chinese market. It's very interesting. We've got a turn here towards the bullishness on stimulation. Obviously, we've seen island reversal towards the downside. We've got an interesting point where it is here and a very interesting point down here. I mentioned that a little bit, my macro week ahead that I do for our private community. It's a very, very interesting market. I'll say that much. And that's all we'll go through. Copper, what have we got going on here? We believe copper is weak at the moment. No stimulation, or at least lackluster Chinese stimulation currently, is leading to copper weakness, demand destruction due to Fed super high rate. Plus, we've also got the UK, the Bank of Canada, the RBA, which is the Reserve Bank of Australia. They were all upped rates, and the UK went 50 basis points last week. So obviously, they're still struggling a lot with inflation. The Fed now, I believe, will raise at least another 25, maybe even 50. I'd be interested to know what you guys think about that. What do you think? 50, 25, 75? None? Give me your reads in the chat right now, guys. Nvidia, yes, we'll do that one. And Billy says Disney Plus is losing money hand over fist. Look, people are probably choosing their services. I mean, what do you guys use? Which services are you using? I'll put my hand up. I have Netflix, Amazon, and KO, which is F1 and basketball in America. Depends on PCE this week. Fair enough. That's a good one. Thoughts on the Nasdaq? We covered it at the start. We'll cover it again soon. So again, copper looks really weak. We got that big turn point. I think rallies get met by sell demand on this one. Let's go dollar index here quickly. DXY pulling back. That's fine. We're looking for this to actually weaken further. I like the idea that it comes back into this little block in here. So watch, if a dollar index traders, you're going to be interested in this. 102 style zone. We got to keep going here. We've got 2 minutes till we open, so let's keep going through a few. Because dollar's been weakening, gold had a bit of strength. That being said, though, gold has not gotten through this level here yet, which is 1940. 1940 might show some small time frame bulls. We continue to reject. We're in the demand zone, but we're probably not low enough yet. So I'd like to see gold come down. And I'm not discounting the idea that gold could get into this to fill this massive inefficiency we have here and maybe even get back into the 1810s. So watch gold closely. I don't think the bulls are back in town yet on this one. It's mostly a day trade swing. And at this point, we're still theoretically swing trade short at this point on gold. At least that's what we're seeing on the charts. We got asked about oil before. Look, I mean, I'm still bored by oil. We're stuck between a high and a low, and we're cheesed in between. I don't want to trade it. That's why I'm barely offering it on the charts anymore. Look, the point of the channel is sometimes I just don't like markets, so I'll just cut them off. You know, Nat Gas was worth mentioning a few times last week. It was finding that rally. This thing, I mean, it just looks weak. I already know where the big demand is. I don't think it's time to turn into buying oil yet, so I'm not really interested in it. I mean, what do you guys think? You like oil at the moment? Anyone care about oil? Someone probably does. To me, just boring, stuck in our range, going down towards our lows. Now, a few people asked me about crypto. We'll cover it once the market opens. Let's just go through our quick checks of the market here. We've got the DAX, which is the German market. Obviously, the Europeans out there, very strong markets at the moment, weirdly strong. I got to say, weirdly strong. For the Australians out there, XJO weak, as I've called recently. I've said this thing is horrible, and it continues to be pretty disappointing. Demand destruction. The UK is also bad because of that. The Nikkei is strong. And of course, the S&P 500 and both the Nasdaq are still finding exactly what we've been seeing recently, which is fairly strong buying, or at least some buying around the demands. Key level to look at today for the Nasdaq is this box in here between 14,800 to 14,700 kind of 80. If we do come into there, do we find buyers? If we do, we're looking for rallies. I would be looking at the US 500. The two key points for the rally points would be here and here. If we get a switch in there and we break through this point, which would be the price of 43.72, that's probably going to show us bulls are back, at least temporarily, and 43.88. If we get a new low and we break underneath 43.36, theoretically, we should continue to sell and then rally at some point and then turn. And that should give us ideally mean reversion. So we're at a pretty big point here in the markets. It's not guaranteed. Of course, nothing is, but that's something we're looking at. The market's been open for a minute as I rant about all of that. What have we got opening up that's strong? Of course, we see here NVIDIA, another day, another dollar for this stock. I'm not so won over by the current pricing on NVIDIA. Look, if you're in it, do you have a reason to get out yet? The answer is no. Would I re-enter this stock? No, I wouldn't. As you can see there on the weekly, it's a TD9. That's a big extension. Now, the last TD9 sucked. We moved down like, I don't know, $4, not even a few dollars. It would suck. So it is an extended market. I'm looking at AVGO as being the one that would be the better. If you wanted to short these markets, let's say you want to attack a strong market, theoretically, this is the one that you would attack. I mentioned it a few weeks ago. I said this is the high, more than likely, and we'll waver on down. I thought we'd rally first. We did rally first, and now we're weakening. And I'd like to see this weaken further. So AVGO, it's kind of doing the thing. Bert Ross says, are you a bull only trader? No. If anything, people would say to me that I'm a dirty bear. So look, I would say that I am generally someone that will just trade replication. So a lot of people might think, would you want to trade, I don't know, Amazon today? Well, probably not, because I don't know if I can see a replicatable trade there. Everything is about replication. I say here, patience, react, don't predict. If you've ever done our day trading masterclass, you would know that everything about success is being able to take the same trade 40 plus times, stat that down to Excel, and basically say, how many did I win? How many did I lose? How much profit am I making at the end? Can I now do this for 2 to 3 years, to 4 years, to 5 years? Is it gambling or is it replication? That's what you're looking for. The difference between you, me, and everybody else is always the same thing. It's not our ability to predict the markets. You could probably predict the markets pretty well, maybe better than me sometimes. However, what I'm probably better at than most people is recognizing when I have edge on a market. And when you have edge, and you'll hear every good trader ever say this, and everyone I've ever interviewed and everyone I've ever spoken to, they know when they have edge on a stock and when they don't. Mohammed Al-Masari, AED, $25. Hey, Tom, what TD sequential indicator are you using, as certain ones don't show TD13s? Also, would it make sense for DIS to revisit the COVID lows? Mohammed, just send me a chat in Discord, man, if you could, and I'll send it to you. I can't remember which one it is at the moment. But for sure, if you have me, just send it to me and I'll sort it out for you. I know you've got my Discord, yeah? The Bull Shark says he's a patient reactionary trader who doesn't predict. Theoretically, that's correct, Bull Shark. I mean, I do predict on the show. Don't get me wrong. I like having a good macro banter. But look, would I attack this market always? I mean, sometimes I do. And sometimes I'll have irrational attacks on things. But when I do such a thing, I'll use options to protect my interests. So say like recently, I'll tell you, I have a short that's a lot lower on the S&P that's still in August, September. So it's a smaller amount. It's obviously a scale in, and that is, underwater. I wouldn't even know how bad it is right now. I'm sure it's really bad, but it doesn't really matter because I still have time on my side. So if it does turn and we get a mean reversion, I might be able to get out with maybe half loss or an break even or even a profit. It depends how it comes down and the way it does. So that's a big one. That's right. Money market exit questions, Tom. Any comment? Well, generally, a money market exit will be a descale. So the way a market trader or a bigger investor would descale a position is they're never going to exit fully. They're just going to deleverage some of their position. Now, how would they make a decision like that? They would look at kind of like a lot of factors. They would go with price as being part of their factors. They would go with extensions away from certain technical indicators, but more importantly, they would also have a look at it on the surface of whether they believe the market has run to an extreme zone. Generally, when I'm taking trades, a little while ago I mentioned that I would have trimmed my Apple. Now, is that a good trim? The answer, I guess, is currently no. I mean, this is where I would have trimmed my Apple, and I would have been pretty happy with that. The current price of Apple is higher. So you could say, well, how would a fund transact this? Well, they might sell, I'm going to sell a quarter of my trade or a third of my trade at these points. So if that's true, then, and they sell a third of their trade at this point, have they still got some going long? The answer is yes. What they're betting on more is that at some point they're going to get this stock at a cheaper price than that. And if they're wrong, they believe they're going to at least get that price. And the reason they would sell somewhere like here is because it's the previous high, and there's a good chance at some point, even if we go to 250, that we will come back down and test this area, allowing them to get back in. But yes, money managers will descale a position. You can get these reports through Goldman Sachs and JP Morgan. You can see the flow in. At this point, we are seeing them turn. We're seeing them sell. Why are they doing it? You'd have to ask all of them differently, but I believe most of them are just looking at it from the perspective of they're saying, well, we had a great run. It's statistically improbable that we continue to go without some kind of pullback. So the average pullback is between 3 and 5%. Now, interestingly enough, we are now currently in the according to Deutsch, we're currently on the 85th percentile of a run. So what that means is if you take all of stock market data and you say, how long has it been since we've pulled back? How unusual is this? We are in the 85th percentile. There is actually a point with no pullback between 3 and 5% that lasted for 300 days. So it's possible to go ballistic. It's improbable, but it's possible. So they're just playing stat odds. Balius Nicholson says smart money is definitely net selling. I would tend to agree with you here. They probably are. Interesting to see the US 2000 bounce that much today on the open here. You can see 0.76, which is kind of good because it's been oversold. So you can see here, that would probably be, let's have a look at a shift here. That would be a fairly bullish sign for the Russell. And I think the Russell will come back up and test that 1850. Pretty heavily oversold. So again, we're seeing back end coming through here, a bit stronger. Some of the crap stocks doing better than usual, which is cool. LV Junk and Hauling, $10. Thank you very much, LV Junk and Hauling. Mohammed, remember to message me as well, please. LV Junk and Hauling, $10. Thanks, man. Thank you for supporting the channel. I always see your comments. Always appreciate it. Borislav Dimitrov says, you dirty bear. Thank you, Borislav. RP, $2. CCL earnings out. Your thoughts, Tom? Is it horrible or is it good? Let's have a look. It was in earnings today. Oh, my goodness. I didn't even know. Down 7.78%. Well, I'm not going to tell you my thought process on the earnings because I don't know how to interpret those earnings. I haven't. Look, the thing about fundamental analysis is I could go through and I could read like a stat sheet and we could go, oh, the EPS is this and this and this and this, and it all looks this, and I can explain it away. Does that mean that I'm getting edge from that sheet better than the robot? What do you guys think? At least initially, if you're going to learn fundamental analysis, you better damn well learn every single thing about that business to get edge. Because if you don't, then you're unlikely to have edge off the robot. So the market initially reacted pretty badly to it. It still ran very hot. TD13, as we know. So, probably an exhaustion technique anyway here. It was up pre-market sell-off. Now, I'd like to see it sell off further. In fact, I'd fib this high to this low, this low to high, and I'm pretty sure somewhere in around 12 would be very interesting. I still love the base. I'd like to see it pull back. Pullbacks actually aren't as good as usually the initial momentum trade, but if this does continue to sell off, I'd like it down to those 12s and even lower. And I would do some analysis over this trade in here. So RP, that's my thoughts at this stage. Does anyone use the Greeks? You mean in options? Yeah, you would obviously use the Greeks to make some of those assumptions. Let's have a look here through US 500. Thank you also to the over 1,000 people that joined us today. Appreciate you guys. Let's have a look at this zone. So we know that the market was kind of showing us that maybe we were a little bit in the demand. We now grapple with the supply here early. So we're finding buyers off the demand. Probably not unusual to see this. Initially, we went negative 0.2 something percent. We're now positive 0.2%. Bulls, you guys want it above these zones here. At least on the day trade, I would probably be looking for at least a 43.71.72 breach. That could be a little bullish signal. And if we get past this high up here, you're kind of thinking maybe we're going towards the dreaded 45.30, which would make everyone lose their minds. Remember, trend technically hasn't really changed here, unfortunately. Are we just seeing rotation into IWM? Today, we're seeing movement into IWM, but it's been the weakest market. So I wouldn't call it yet. Because if we go down to IWM, where are we? Here it is. What you'll notice is for today, yes, the rotation is there. Could I see this rallying more? Yes, I guess I could, because I expect it to get back into this zone in here and then struggle through here because it's sold so aggressively. It's oversold. Did it hit our demands? No, not really. So what's happening here is we're getting this oversold rally that could go like this. Be a bit careful in here, though. I suppose Nasdaq needs to sell off more to call it rotation. Yeah, that would be something that you could look at. So a nice combo you could run if you wanted to check that out, which is a great idea. I like it very much. Could be like a Nasdaq/IWM. Then you could go over here and look at the daily and you could say, okay, well, how did rotation look last time? And what we saw was we had quite a long period. And then around this August, September sell-off. So this was the sell-off that happened. So a good thing to do here would be load an SPX on the chart as well. And we'll be able to see the rotation. What you notice here is that we actually have a big rally. Okay, we'll call it similar to this time. We see a sell. And initially in that sell, the buy the dip reflex of NASDAQ was very strong. You can see it here. Then we bottom off again. And then all of a sudden during the next rally, it's not so strong anymore for the NASDAQ. So if we do get mean reversion on the NASDAQ, the question will be, is it best then to buy the NASDAQ initially? Probably, because it has elastic demand. If we see a double sell-off, it might be that actually the Russell 2000 will then become the next rally. So again, that's when you're going to see that rotation. Again, the initial will always be what's going to have the most demand. Well, the elastic demand at the moment is still tech. So I think tech would buy pretty strongly off of 20. Then you would see the rotation after that. Tesla is over. What do you mean Tesla is over? Tesla hasn't sold off. Well, we didn't see it sell off. No. Not underneath our zone. I'm not sure what you guys mean by Tesla is over. There's Tesla still on the demand. Bullshark says, BTC, do you trade it, stack it, avoid it? How to best play it? ETFs, actual coin, etc. My opinion is always going to be actual coins, obviously held correctly. With BTC, a few people have asked about it today. How would I play this? I swing trade it. I don't day trade it very often at all, if at all, because it's too big on the CFDs or the futures contracts. I don't like the spread. I think it's too much. It's illiquid from that aspect. It's getting better each year, though. The way I would play it is always the same. I would basically say, okay, if I want to hold Bitcoin, what am I doing? During crash periods, you're looking for around 80 to 86% sell offs. Now, you have to average in, and you're not necessarily going to always get everything you want. So if we take this high to low period, you can see here that we get a 77 point, what the hell is that? 77.7% or something like that sell off. So generally you'll get 80 to 86. That's what the statistics are in the past. This one here went 77. So as you base off in here, do you buy in? Of course, our base case was somewhere around, I think it was 12,000, 9,000. Now, timing is everything. We thought that we would bottom into, I think it was February of this year based on previous cycle kind of dynamics. And now you've got to ask yourself the question, let's say we're in a new bull run. What does crypto do? And I asked the chat this, you guys know. What does crypto do if we've based and the stock market has rallied? 6 months later, crypto has a breakout. And it's relatively significant. Funnily enough, let's say October was the low, we're a little bit overdue for that. And that's where you get that BTC slash Nasdaq or BTC slash S&P style coding. You can basically say here, if I put $1 into Bitcoin, has it performed well versus the Nasdaq? The answer is no. It's performed pretty trash. Now, traditionally, it performs pretty good after these periods. So, yeah, it's an interesting one. This is where we were October. This is where we were, obviously, 17 into the crash. And then, funnily enough, the market crashed in 18. So we got like a December, just January kind of period. Then all of a sudden, Bitcoin overperformed the Nasdaq and overperformed other asset classes about, yeah, you could argue about 4 to 6 months later, we kind of got that rally up. S&P taking off, yeah, well, it's all demands. I mean, what can you do? It's not a seller, unfortunately, yet. Let's have a look at AMD. This stock and I don't have a good past. Why, you might ask? Well, problem with AMD is I know in my mind this stock always was a badly run company that used to go really bad. I mean, I've seen this stock go under 10 so many times. If you go and have a look here and you remember the past history, look at it. Little $4 AMD. Seems ridiculous now. Then they make a good chip. Then they become complacent again. Anyway, from a technical perspective, we got a new high steal over here, which is, again, kind of coming to that high sequential area. We did get a change of trend. It kind of looks weaker than the other ones. Do I want to buy it here? Probably not. I would rather buy it at least mean reversion. And you can kind of see it's already found one buy after 20. So I wouldn't be surprised at all to see it down there. That would be also consistent with the double topping effect. So the A equals B. So I think AMD might go up today because of the market, but overall probably looking towards weakness. ADSK, I'll do it quickly. Autodesk, good base. Daily volume is quite okay. It's not like horrendous. It looks like it's based off this stock. May take a while to come through. I'm not sure whether their software, if it is Autodesk, I guess they make CAD or something, is super good anymore or anything. But the technical just shows it's trading in a range. It has the selling. It has the change of trend. It's based here many times, which has been pretty good level for buying. And yeah, no momentum or breakout at this point on that stock. Looks okay. And then the last one, TSM. Let's have a look at Taiwan Semiconductor Manufacturing. This stock always underperforms in recent times. It's had a good run percentage-wise, but still underperformed. It's kind of like all the other semis. Comes into the final form of supply, sells off. Do I like anything about that's a horrible weekly. I mean, frankly, it still looks horrible, like the semis do at the moment. Stock markets have rejected this point. Let's have a look where the point was. We'll go over here, US 500. So it just about tapped into this high here. But yeah, basically it's just kind of floating into our supply. So again, watch the stock market closely here today. If we get a breach through here, it's probably pointing towards further bull side action for now. If it fails and rejects this zone, again, it's probably good because it's showing you that mean reversion could be around the corner. Stay safe this week. Make sure to subscribe if you enjoyed today's content, guys. Thank you very much to the donators and supporters of the community. I appreciate each and every one of you. Do remember, if you're interested, you can check out the link on the right for our free giveaway June competition. And let's enter the poll here. Only 43% of you, 43% of you said that you would buy mean reversion. So a lot of you are much more negative on the market, I guess, and you don't want any of that. DRK says, can we do ETH before heading off? Sure, we can have a look at it. Ethereum's in a very large clump after having that nice rally off the low. The problem with ETH and why I usually wouldn't bother with it is because Bitcoin will lead first, and then you'll want to use some type of ETH BTC combo. So at the moment, you can see here, ETH is, I don't know if this is the correct ETH BTC combo, but basically ETH is weakening towards Bitcoin. I always see that. I would not fight that. So if you have a look here, the big run was obviously over this period. So if we load Bitcoin on your chart, just think about it logically. If we come down here, what performs best over this period? We get a nice pickup in Bitcoin. It does nothing. And then all of a sudden it goes ramping through. So I just wouldn't, I'd always go Bitcoin first. That's my personal opinion. Bitcoin first, Ethereum second, random craps last if you want to do it. All right. Thank you so much, guys. And I will catch you next week at Monday. And of course, for now, we're watching this market like a hawk to see what happens next here and whether this demand can hold up. Do remember, none of our key critical supports or demands got broken. So we can't really be ascertaining that the market is weak. The data statistics are very bullish. The macro is horrendous and looks very bearish. So it's a very complicated time in markets. And really all we have to stand on at the moment is price action and trying to figure out when these trends actually shift. For people that shorted last week, congratulations. Obviously, it was a good statistical week to the short side. But this week, well, the data says bull. The demand currently says bull. We're going to see whether the market can actually reject and find some sellers. Stick with us throughout the week for our daily show. If anyone's new, you would know that, or you may not know that we produce a daily show every day of the week, pretty much for the markets. We've done that now for 2.5, 3 years. And it's thanks to you guys that we can keep doing it. So appreciate it. Have a great week. See you next time. Bye for now.